Well, greetings, my beloved clients and friends. Coming to you from this place called Hamptons Plaza in this town called Ho Tram in Vietnam. A couple hours outside of Ho Chi Minh on the coast. It's an area that's experiencing rapid development. A lot of big hotels and stuff, and luxury residences and stuff like that. So, but man, it's dead right now. So, still very early in the development. So, that's why I wanted to come take a look at it. But anyway, meanwhile, back at home, the market is tanking, and I just want to let you know there's internet here. I know what's going on, and just wanted to give you my opinion or thoughts on what's happening right now. So, Trump's coming in and he's making some huge changes, and there's a high degree of uncertainty about what is he going to do next and what will be the results of what he's going to do. And so the market doesn't like uncertainty because the value of an asset is the discounted present value of its future cash flows. So when the future cash flows come into question, like what's really going to happen in the future, nobody knows to begin with. But when there's stability, you could kind of plan, and when there's instability, you have to really plan in a bigger margin of error because you don't know, right? So when you have to reprice in that insecurity and instability or uncertainty, it's going to bring asset prices down in the near term. But I believe the changes that he's making from an economic standpoint, not from a social standpoint, I don't want to talk about that, but from an economic standpoint, I think there are some needed changes. And let's just talk about a few of those, and that I believe, while they may be uncomfortable or even painful in the short run, I think they will yield, are needed, and will benefit the country and the economy and the markets in the long run. And so let's talk about a few of those. One is that the government has gotten very big and they spend more than they make. And if you look at the financial statements of the government, if you look at their income statement and their balance sheet does not look good. There's too much debt on the government's balance sheet. Their income statement does not look good. Their expenses far outweigh their income, right? So when the expenses are more than the income, they have to borrow to finance that. So the balance sheet is bad and getting worse, right? So he came in and brought in other businessmen with him, and they looked at those financial statements and they said, we have to do something to bring the debt burden down and bring the expenses down. It's hard to argue with that. I mean, there's other things you could argue about, but the need to fix the balance sheet and the income statement, man, it's hard to argue with them. That one specific thing. So that's what he's trying to do. And another thing that he's doing with tariffs is tariff is a tax on consumption. So currently the main source of revenue for the government is tax on income, right? You get taxed on how much you make, and you get whether it's from working or from investing, right? If you make money on an investment, you get taxed on it. It's capital gains. If you make money from working, you get taxed on it. It's income. Well, consumption tax is being taxed when you spend it. Okay, so if there could be a shift from taxing income to taxing consumption or spending, um, you can still generate income, but it changes the motivation. Like I was talking to a client today, and they're like, well, there's some positions that I would like to sell, but we have a huge gain in them. And the government wants their share of that gain if we sell it. And so it's like, you're damned if you do and you're damned if you don't, right? Because it makes you almost want to feel like, well, shoot, I don't even want to make income if I'm going to have to be taxed on it. Because in every investment, the government is your 25% partner. He goes in there with you on every investment you make. He says, I'm your 25% partner. Whatever we make, I get 25 and you get 75. And even when you work, you're working for Uncle Sam for 3 to 4 months out of the year, roughly about till April 15th. Those first 3.5 months of the year, you're working for the government. And then after that, you can start keeping some of that money. So, people don't think about it, but that's the case. It could, what could be, our last video we talked about follow the money. So what could potentially be the motivation there? So, well, I don't want to make as much because I don't want to have to pay so much in taxes. But what if the tax was on consumption instead? It would motivate people to say, well, shoot, maybe I shouldn't spend so much because every time I spend, I get taxed. Or what could I do with my money instead of spending it? Maybe save it or invest it, right? Because, man, I don't get taxed for saving it. I don't get taxed as much from investing it. Because if the government were to shift from taxing income to taxing consumption, it would kind of change the motivation. What if we were a nation that was motivated to save and invest, and also motivated to make as much as you want because the tax wasn't that much? You know what I mean? Lower the tax on income, raise the tax on spending. I don't know, it's a thought. So anyway, it reminds me a lot of 1980 when Reagan was elected, and against the backdrop of an era of stagflation, a stagnant economy and inflation. Also, what was happening in 1980 was the rise of Japan. This country was rising in the East and really becoming, many people increasingly considered them a threat to U.S. supremacy. There was also a Cold War going on between the U.S. and Russia. And the economy wasn't doing that good. Like I said, it was a stagnant economy. There was high inflation. And so the incumbent lost and the new guy with radical ideas won. And guess what the first thing he did was? Him and Paul Volcker, who were the Fed chair, the first thing they attacked was inflation. They said, we got to get this inflation out of control. And they raised interest rates to like 16%. And they deliberately pushed the economy into a recession. There was a recession in the United States in 81 and 82. But they broke inflation. And they got it under control. And they brought rates down. And they ushered in an era, like a 20-year run in the market where markets were did really good throughout the 80s and 90s. There was essentially one bad day, like October 1987. But aside from that, man, the economic times were pretty good. And this pink polo shirt, man, I was a kid in the 80s, and I graduated in 85, and in high school we were conservative. We were in the 70s. They had long hair. We had short hair. We wore polo shirts. And we wanted a BMW. It was funny. So anyway, we were the Reagan kids, and there was no wars for 20 years. We won the Cold War. There was one war in 1991, the Gulf War one, and General Norman Schwarzkopf went in there and won that war in 8 days and got back out. We're in one, we got out. And that was it. I was in the Army from 85 to 95, and I didn't get to do any tours because there was no wars to fight. Oh. So it was but there was pain in the first year when they took it into a recession. And so it kind of, and Japan kind of fizzled out by the late 80s. The Japanese threat, the rising sun, it kind of fizzled out, and they've been like in a 30-year recession ever since like since about 1989, 1990. So, and because he made some big sweeping changes, and a lot of the changes that he's trying to make are similar to the changes Trump is trying to make. So, it kind of makes me, here's the analogy that I liken it to. Imagine your wife said, hey, you know what? Our kitchen looks pretty dated, honey. I mean, we go to the neighbor's house, they have a cute kitchen, ours is kind of dated. And you're like, you know what? I don't like to hear you complain, but you know what? You're right. It is. So let's go ahead and get someone out here and get some ideas on what we could do to our kitchen. And he brings some people out, and one guy really jumps out, and he shows us like this really nice idea for what he wants to do to your kitchen. And you guys both look at it, gives you like a 3D illustration of it, or at least 2D, and you're like, what? Let's do it. So you write him an initial check, and he's okay, I'll start on Monday. Monday you leave for work, and he shows up, and when you come home from work on Monday, your kitchen is destroyed. I mean, it's a mess. There's no more fridge in there, no more stove. It's taken down to the studs, and you're like, what? I gave this guy money, and he said he was gonna make my kitchen beautiful. Look what he did to it. We can't even use it. There's no fridge, there's no stove, there's no dishwasher, there's no sink. We've been scammed. And you're just furious. And how can I live like this without a kitchen? And you're like, we can't live in this house, let's sell it. And you're like, well, shoot, how are we gonna sell a house without a kitchen? What kind of price are we gonna get? Who would buy this house from us without a kitchen? Because of what this guy did to it. Who would buy that kitchen? Who would buy that house without a kitchen? I'll tell you who would possibly buy it. Someone smart. Someone that could see your distress and see that the value of your house dropping suddenly freaked you out, and you're ready to sell. And he might be able to get a good deal from you because you're afraid that what you saw, the damage that was done, scared you, and you want to get out. And so what would he do if he bought it? He might destroy it even more. He might go in and destroy your bathroom too. Right? That's called a flipper. He would go in there, destroy your bathroom, then put in a new one, put in a new kitchen, and then sell your place for a lot more. Right? All because you didn't give him time to do what that builder, that contractor, he had a plan. And step one was to take out all the old stuff. And when you saw it, you freaked out. And you made perhaps an irrational decision of selling, and now someone came in, bought it from you cheap, and once it's fixed, he's gonna sell it for a huge profit. Are you tempted to do that right now when you see your investment portfolio and you see this guy come in and tear out your kitchen and drop the value of your asset? what all I'm saying is maybe give it some time, because if and it seems like the bond market is um, opening up to this possibility that it might be fixed. So now, at the start of the year, I told on videos and to my clients, put your seatbelt on, because it's going to be it could be a rough year. But I see over the 3 to 5 year period good growth, not only because of the changes that the current administration is making, but even more so because of this radical revolution that we're experiencing, called the AI revolution. It's like similar to the computer revolution and the internet revolution, and it's the next iteration of a tech revolution. It's the AI revolution. And I think perhaps, you know, it might give Trump a tailwind, and he might give credit for something that he didn't really do. It might go well with him because he just happened to be in the right place at the right time. If you look back, 4 years from now, because of this tech revolution. So, what I just want to say is, man, I see what's going on, and I'm not overly concerned. I know that there's a good chance. Well, it's already proven to be in the first two months of the year a bumpy, choppy year, and I think that chop is going to continue. But like I started to say, that the bond market seems like they're giving credit. When I at the beginning of the year, I was concerned that rates were going to go up over 5%, and they had gone up to about 4 3/4. But since then, rates have come down, and I think they're giving Trump credit, because it seems like he is going to take the necessary painful steps to improve the debt problem of the United States and the spending problem of the United States. And if he could improve those things, the debt market will reward him, and it seems like they're starting to. So is right? I want you to think about, here's a picture of what your kitchen could look like. But in reality, there's going to be you're going to have to eat out for about a month, right? And have no kitchen. And it's going to be dusty and messy, and you're going to be pissed and not like it and have to write checks. But in the end, you're going to have a nice kitchen, right? And people have a way of forgetting. People that have babies, they're like, man, that was rough. I never want to do that again. And then a couple years later, they're like, let's have another baby, because the joy outweighs the pain. And so I don't know. I know that it's currently unpleasant, and it might be unpleasant for a little bit longer, but I think if they're able to clean up the balance sheet and the income statement of the U.S. government, there could usher in a sustained period of growth, similar to what we saw in the 80s and 90s. That's what I'm seeing. There's a lot of bad things that could happen that don't bring that to fruition, but for now, I'm not overly concerned with the current what the contractor has to do to fix the kitchen, if I could put it that way. So hope that gives you some encouragement to ride this out a little bit longer, and that this pain is not coming as a surprise. We talked about it at the beginning, and I think it's needed, and I think it has the potential to make things better down the road. So, and if that's the case, I'm all for it, rather than the opposite, which would mean continuing to get into debt. And I'm reminded of another scenario when back in 2003, I bought a really nice house in this gated community. At the time, I was making really good money, and I had also just sold a house that I had bought a few years ago. It had doubled, so I had I had equity put down. I was able to put down a good deposit. I had good income and good credit, so I was able to get a really nice house. And it was in a new development, and as that development started to build out and fill in, and people started buying houses and started getting new neighbors, one thing that I was kind of surprised. I don't want to sound snobby, but some of our new neighbors was like, how are they affording that house? You know, as I find out what they do, and obviously they didn't show me their pay stub, but like, you know, I could understand if you're moving from Orange County and you had a house and you had some equity like I did, but a lot of these people were first-time buyers, and I'm like, how are you affording that house? And not only did they get a new house, a nice new house, they had new cars in the garage. You know, these places had 4-car garages. Not only had new cars in the garage, they had Sea-Doos and toys and toy haulers, and like, man, you know, if it was one, there's like, maybe there's a backstory, but there was several. And I was like, wow, what's going on here? And you probably know what's going on there. There was the debt was free flowing, and this was in the early 2000s. And if you could fog a mirror, you could get a loan, and a lot of these were bad loans, negative amortization loans, and it lasted for a while, but not for long. And before long, some of the people that moved in moved out, and we started to see a lot of brown lawns in the neighborhood. That was the thing. You see all these brown lawns, and you know, bank foreclosures. The toys gone, and the cars gone, and the people gone, and the brown lawns. And the reason was because it was all financed on debt. And you know, the Biden administration, his 4-year term ended with the stock market at an all-time high, and you know, he had an inflation problem, but you know, a lot of that was because he financed all of it, you know, and that can't go on forever. And it feels good for a while, you know, they're eating at nice restaurants and having toys and new cars and new houses, but it was all if it's all financed on debt, that needs to be corrected. It cannot continue. That's what the government was doing. They were doing all kinds of projects and sending people to college for free, and if you're not working, we'll send you a check, and you know, all these things that feel good and feel like the right thing to do. Well, yeah, if you have the money, but if you're borrowing to do it, one day you're gonna have to pay that back. And I think that's why, you know, interest rates were going up, because you know, if you were to look at the income statement, the balance sheet of the U.S., and you were an investor, you would ask yourself, and you ask yourself, do I want to lend to this institution? And if you just looked at it as a financial analyst, you'd say no. Their income statement doesn't look good, and their balance sheet looks, I don't want to lend to them. And that's the position that the United States was heading into. You know, their saving grace was that they could print cash, but it aside from that, it wasn't a sound investment to lend to them, right? And so, if these businessmen are going to come in and improve the income statement and the balance sheet of the federal government, and if that causes some short-term pain, I want to give them some time to see what happens, and because I think if they're able to do it, we could see some nice returns over the 3 to 5 year period, and perhaps longer. And I haven't soured on America, and maybe in the next video I'll talk about why I like investing in America. But anyways, that's my 2 cents. Hope you have a great day, and I do want to continue to stay in touch through these turbulent times. All right, have a great day.